Hello friends. So today we are going to learn how to maintain cash book and subsidiary books. And in this video I am going to tell you a basic technique how to pass the entry even without knowledge of the any journal entry, ledger book, cash book. Simple way, that means how to debit and which account is to be debited and which account is to be credited. So I am going to tell you a simple technique. Okay, that means by this technique, even from the non-commerce background students or bankers, those who are from technical background or science background, they will learn how to pass the entry or how to make the entry, because this is the basics of accounting, and without knowledge of this we will not be able to do the reconciliation or we can make the entry. Okay, so starting with we have to learn how many subsidiary books are there. So we learn here only three basic subsidiary books. Means number one is the journal, number second is the ledger, and number third is the cash book. These are the three basics books of account which we have to maintain to pass the entry. Okay, so first we have to see what is the journal. Means in journal, this is the basic books of account where we make the entry in chronological order. Chronological order means date wise. Okay, means if today is the first, we'll make all the entry of the first, and tomorrow the second. Then when tomorrow will come, we'll make the entry for the tomorrow. Okay, so I'll just show you the format of journal. Journal format is given like this. This is the given format of journal. Okay, that means a date is there, and particular means description is there, and which account is to be debited and which account to be credited. The account which to be debited is written first, and account which is to be credited, that is written at the last. Okay, so that we can see here. Now you can see, like, if cash account is to be debited, we have written cash book first, and JSC's capital account is credited, we have written at the last. So debit account is written first and credit account is written at the last. Okay, and second format I have given here, you can see general ledger. Okay, so general ledger contains all other books of account. Means like Ram's account is there, salary payable account is there, any debtor is there, any creditor is there. So that means general ledger will have page wise. Okay, like say you have sold something to Ram on credit, then you want to open one Ram's account, so you write here Ram's account here. Okay, in the same book. Okay, and the next page, if you open something Binod account, so you can open next page Binod account and leave sufficient pages so that you can make entry for the whole year. Like Ram's account, you can give 10 pages. For Binod account, you can give 10 pages, and so on, depending upon the number of entries you can predict. Okay, so this was the format of general ledger. And next book is your cash. So this is the format of cash book. Okay, on the left hand side, cash book means left side means this is the two pages of the cash book. Okay, this is the first page means left side, and this is the right side of the page. If you open one register now, you can see left page and right page, and this is the your folding page. Okay, so left hand side, right hand side. In the left hand side, we always debit the account, and the right hand side we always credit the account, and we'll tell you how to deal with the cash book. Okay, so on the cash book, whatever amount you receive, okay, whatever amount you receive on cash, that is always written on the left hand side. So this is also called as receipt side. Must remember this. This is the basics of accounting. Okay, must remember this. Means this is the receipt side and this is the payment side. Okay, if you remember the cash book, that means your 90% problem will be solved. So you must remember, I'll reiterate here, I'll repeat here. In cash book, left hand side is always debit and right hand side is always credit, and the left hand side is always receipt and right hand side is always payment. That means if you receive the payment, you will write in the left hand side. If you make the payment, you will always go to the right hand side. Even if you don't remember debit credit, no problem. So debit In the cash book, debit, receipt and credit payment. Okay, then moving ahead. Now moving ahead, how recording is done. That means what is the accounting cycle, how entries are made. So here are the three accounting cyclic. That means how the accounting cycle will pass. So first and foremost is the recording. Okay, so in the first instance, all transactions should be recorded in the journal. Okay, that is called generalization also. Okay, so you must remember here generalization. Generalization is called generalization also. So first is a generalization. When you make the entry in the journal book, it's called generalization. Then classification. All entries in the journal are posted to the appropriate ledger. I showed you the ledger book. That means then after generalization, you will pass into to the ledger book. But in journal, all the entries are recorded as per date wise. Keep in mind, as per date wise, 1, 2, 3, 4, 5. No entry will come in between. You can skip the date also. Okay. So, and after generalization is very, very important. Okay. That means from the generalization, you should not commit any mistake. And while making the generalization, it must be supported with some documents. Means documentary evidence has to be there because you are passing an entry. Then comes classification. So classification nothing but passing entry from journal to ledger. Then from the classification, that is from journal, summarizing. Summarizing is the last step where we prepare our trial balance, we prepare our profit and loss account, and we prepare our balance sheet. Okay, so this is summarization is done at the end of any particular period. Okay, you can prepare a monthly basis, you can prepare yearly basis, but final books of account are prepared as on 31st March of every year. Okay, but normally trial balance is prepared every month, but you can prepare every day also as per use, because nowadays after the computerization, now data handling has become very easy, so trial balance can be prepared any time. And similarly, final accounts can be paid for monthly basis, but as per law, all companies or business enterprises, they are preparing their final books of account as on 31st March of every year, so that what is the profit, what is the loss, they can ascertain. Okay, so I'll repeat once again what are the cycle of this accounting entries, because this question is asked. Okay, so recording is also known as generalization, means where we make the entry in the journal. Okay, number 2 is the classification. So from journal we make entry to the appropriate ledger and cash book. And last, the summarization, where we prepare trial balance, final books of account, and we arrive at the profit loss, and we prepare the final balance sheet. Okay, now moving ahead, we have to see how many types of account are there. So for knowledge sake, you have to learn. So broadly, these accounts are divided into two parts. Number one is called the personal account. Number one is called personal account, and number two is called impersonal account. Okay, so I'll repeat once again here: personal account and impersonal account. Impersonal account is further divided into two categories. Number one called real account, and number B is called nominal account. Means number one is real account and number two is nominal account. So personal, impersonal, again two parts of impersonal, real and nominal. So we'll see what are the types are here, which account you will put where. So we'll see one by one. So you can see one list is given here, like personal accounts, which are personal account, which is real account, which is nominal account are here. So personal means related to person, maybe artificial person also. So personal, you can remember all person means Ram, Shyam, artificial like creditors, maybe anybody. Capital is also personal because artificial person. Debtors, maybe person Ramesh and debtors. Bank overdraft, artificial person. Drawing, artificial person. So all person and artificial person, they are coming under the personal account. And real account you can relate to the like asset. Okay, maybe movable, immobile, tangible, intangible, all real assets are coming under the real account, like land and building, motor vehicle asset is there, goodwill is intangible asset, investment is the real asset in the form of cash, whatever is there. So this is the real account, you can like correlate. Next, nominal account means not having any existent, but we are paying. Okay, like excise duties there, correct? means person is not there. Excise duty, salary, bad debt, depreciation, wages, repairs, interest received, purchase return, okay, freight, return inward, correct? So, but it's very difficult to remember all how to deal with these accounts. Okay, and there's one law also how to make the entry. I'll just show you how this law is related to all the entries. So, debit and credit entries are made like this. Like personal account is there. So, it if receipt is there, that means you debit the account. Means you make the left hand side because always debit and right hand side is always credit. Okay. In personal account debit always receive and credit always giver. Same for the real account also. Debit always what comes in and what is goes out. That means now personal and real. When anything comes in, that is always debit because our cash is always real account. I told you cash. So when cash comes in, that means you receive the account is always debit. Okay. When cash goes out, so always credit means right hand side. Correct. And nominal account is always opposite to always personal and real account. That means nominal means if expenses or loss is there, debit, and gain or income is there, always credit. But it is very difficult for you to which is the personal account, which is the real account, which is the nominal account. So it's very difficult. So for that I just going to tell you very basic technique how to pass the entry even without knowing which is the personal account, which is the real account. Okay. So here we have taken some data and we are going to make entry out of this. So one thing you have to keep in mind, because I told you cash book is the basics of all the entries. Okay, cash book. So you keep the hold on the cash book. I'll repeat once again here. In cash book, what comes in, it is always debited, means left hand side. What goes out, it is always credited, means right hand side. So if you remember the cash book, you will remember everything. So I'll just repeat here because I'll take the help of the cash book only. So if cash book is there, on the left hand side always debit and right hand side always credit, and it is incoming and it is outgoing. Simple, means if income is there always in, expenditure is there always out. Okay, if you remember this only this concept, you will make all the entries. Okay, and in this we are going to follow double entry technique. That means whatever entry is there, whatever transaction is there, will do at the two places. So first of all, we'll make the entry only the general. And first means one account is to be debited, other account is to be credited. Okay. So here I've taken example here. Let's say I'll do one by one. I'll make you understand how to make the entry. Correct. And we'll make the entry in the two books of account. So first is the here, like on 1st January 2018, Jayashree started her business worth 80,000 rupees. So Jayashree has opened one, maybe any enterprises she must have opened, and what is the worth? 80,000 rupees. So Jayashree becomes the owner of this business enterprises. So now we are going to entry in not in the books of account of Jayashree, but the business of Jayashree. Okay, and Jayashree has started with 80,000 rupees. That means owner has given the capital. Correct. So that means in the books of account of business, the 80,000 will be as a capital invested by the Jayashree. Correct. Now, because Jayashree has given the cash. Okay. So Jayashree has given the cash. That means in the books of account of business, cash book, because I told you business is receiving the cash. So cash book will be debited. Correct. So what entry we are going to make here? So cash book will be debited 80,000 rupees in the left hand side. Means if you are making it in the journal, no problem, just write here debit. And what you are going to credit? Capital you are going to credit. Okay. So debit the cash book and credit the capital. Correct. Because Jayashree has invested amount as 80,000 rupees. So I'll just show you how to make the entry in the journal. You can see here. See, you can see here. Cash account debited. I told you because cash you are receiving is receipt is always left hand side. So debit by 80,000 rupees. And capital account credited by 80,000 rupees. So in this way we can make the entry in the journal. Okay, next I'll see here. Cash deposited to bank. Cash deposited to bank 40,000 rupees. Cash deposited to bank. Now, cash deposited to bank means again cash book means is debited. Correct? Cash means cash is debited because cash is received to bank. Correct? But bank side, correct? Now see the entry here. So this shows that cash is going out. Correct? This shows that cash is going out because cash is deposited to bank. So cash, she's paying the cash to bank. So cash will be credited and bank will be debited. So in I'll just show you how to make the entry in the cash book also from the journal. Okay. So because she's paying means cash is going out, but where the cash is going is going to bank account. So bank account will be debited and cash account will be credited. Correct? Now third one, goods purchased 5,000 rupees. So wherever there is no mention of debit, credit or whatever their cash, so always we take as a cash. So goods purchased rupees 5,000 rupees. What is the meaning of that? Purchase means on cash basis. So cash is going 5,000 rupees. Okay. So cash will be credited. 5,000 rupees going now. So payment credit. Okay. Means right hand side. So cash will go where the go and which account to be debited? Purchase account to be debited. Now you can see here. So I'll just show you how this happening. Yeah, purchase account is debited and cash account credited. Correct? Next you can see here, goods purchased on credit rupees 10,000 from Lipton and Company. Now credit. Okay. So for the making entry of the credit, first think about the cash. Let's say it is purchased on cash. Okay. Let's say, just assume that it has been purchased on cash. So which account is to be debited, which account to be credited, because we are paying. Let's say we are purchasing on cash. So we are paying. Paying means amount is going out. So cash account should be credited. Correct? So cash account, if it is credited, then which account is to be debited? Which account to be debited? Purchase account. Okay. So because it is going, the purchase account is to be debited. But we are doing on credit. So you just remove cash here and you write here Lipton and Company. I'll repeat here, this concept is very, very important. Correct? Because we are purchasing on credit. So first we'll assume that as if we are making cash payment. Okay, cash payment means your cash will be credited. So I wrote here cash book credit. Okay, cash book means cash account credit. But which account to be debited? Purchase account to be debited. But we are doing on credit. So we remove the credit, we write the, in place of cash, we write the Lipton and Company. So in this way, from the cash book, we can make the entry. Okay, last, sales. Again, sales is not mentioned, which is debit or credit. So we'll take as a cash only. So now because sales is on cash, so cash you are receiving. So where receipt will go? On the left hand side. Left hand side means debit. So your cash will be debited and where will go? Credit. Sales account will be credited. Okay. So in this way you can see how we have made the journal entry. So I'll just show you the last entry also, how it happened to journal entry. Sales account, yeah, cash account debit and sales account credit. So in this way, if you remember this technique, this will help you in making the entry even without remembering any type of books of account, means personal, impersonal, and real, nominal account. You don't remember, just make the entry. You just hold the cash book. You can make the entry on other books of account also. Now I'll show you how the entry in the cash book will be made from the journal. From the journal we'll take entry. So first cash account debit. Okay, 80,000 rupees. So write the date here first. And details you can write here. Capital invested by this, and debit is this side and credit is this side. So cash. So you can write here 80,000 rupees here. Correct? So now second entry, you can see the what is second entry again. Cash account. Yeah, cash account is created. So second entry you can make the cash account is created. Is created here. 40,000 rupees because deposit to cash. You can make entry 40,000 rupees. But same day bank account is debited. So where bank is there? Bank is 40,000 rupees. Okay, so bank account will be debited. So this is a contra entry. Correct. Next, you can see here what is the entry? Purchase account to cash means purchasing has been done. Good purchase on cash. So cash account is created. So because purchasing you can describe here, you can write the description area details. No, purchase again. Cash you are paying 4,000 rupees. So write here 4,000 rupees date wise. Correct. And next you can see here purchase. Now fourth entry purchase left on because cash book is not involved, so not make the entry because cash book is not affected here. Now fifth entry cash account debited, so again you can make sales here. So cash account debited, so 11,000 rupees cash account debited, so you make the entry here 11,000 rupees. Correct. And you can make the total. What is the effect you are getting here? So we can make the effect. So at the end of you make how much is the debit balance, what is the credit balance, you make the entry and we get the what is the debit balance of cash book. Okay. So I have made the entry in the cash book, that means 91,000 is the coming grand total both side. So whatever surplus is there, so this is the excess cash. Okay, so this is called excess cash. Correct. So like in the particular month January I have closed the cash book, so we are getting 37,000 as excess. When next month I will go, this will go as the opening entry for the February month. That means now again opening entry will come being forward. So being forward means second means first February it will come 37,000 as a debit balance in cash book. Okay, so while preparing this trial balance, now I'll show you the format of the trial balance. This debit balance will pass through the trial balance. Okay, in this way we'll be closing the cash book and we'll be closing all the ledgers and we'll pass into the trial balance. So I'll just show you the format of trial balance. So this is the format of trial balance here. That means this is the net trial balance actually I have shown here, because two types of trial balance are prepared. So this is called net trial balance. Okay, where the only debit and credit means balance debit and credit entry are passed. So cash book because it is a format I have put here 4,000 rupees. Otherwise if you take the entry from there, so that will be 37,000 rupees. Okay, so trial balance are prepared in two ways. Number one is called the net, second called the gross trial balance and net trial balance. Okay, so in trial balance, that means where the gross trial balance is there, so we pass the entry of the gross amount. Correct. So if we are taking the gross amount here, so I'll just show you 91,000 rupees is coming and it will coming here 44,000 rupees. Like if you deal with the cash, only the cash recording, so it is coming here 44,000 rupees total of this. Okay, so if you are making the gross trial balance, then 91 and 44 will pass through. 91 will come at the debit side and 44 will go to the this side. So that with the gross trial balance. Okay, so we'll deal separately with the trial balance in the next chapter because trial balance is very important. So in this way we learn today how to make the entry without knowing which account is to be debited, which account to be credited. Because being a banker, you may be from the other background, you may not know which is the real account, which is the impersonal account, which is the other types of account like nominal account, and we have the past entry. So you must remember the cash book entry. Okay, I'll repeat once again here because I'm closing this video. So cash book, left hand side always receipt is there and right hand side always payment is there, and left hand side linked with the debit, because when cash account is debited it is always receipt and we are making the payment, it is always credit. Okay, if you remember this, I'm sure you'll be able to remember how to pass the entry. Okay, because this making the entry is 100%, one or two questions they ask in the examination for Jaiib, how to make the entry. Okay, so next video please stay tuned with me. I'll be doing trial balance and bank reconciliation statement. Okay. Thank you very much. Have a nice day. Good day.